This is Short Hammer. It is the 25th of July, 2021, and this is Trading Zones. Prayerfully, everyone had a great week of trading. The market was nuts, but it goes back to what we discussed, right? On the dip, the statement that I made was this, right? When we ran back up, whenever you're running, what you want to make sure of is the cash flow. And what that means is this: if the market takes off and it's going up, if there is check the money flow, and if there's not a significant amount of money involved in that push, the chance for a retracement is high. Just in my humble opinion, right? Everyone has different views of the market, different things that they look at. I think retracement is the chance for retracement is high because the market is truly designed not for retail traders, but for institutional investors, right? And retail traders are like a necessary evil in the market. So if you think you're moving the market as a retail trader, and it's a blue chip, chances are you're probably not. Just because the market moves on money, and institutional investors have much more than we do. So if something's moving and it's a blue chipper and it's moving without institutional money, be careful because there can be a retracement to give them an entry, right? But if it's moving and they begin to get in and you see the cash flow going up, that could be a different case. Just my opinion. So whenever I see something go, I want to know, are the institutional investors in? Are the hedge funds in? Who's in? If it's only retail, I'll let it go because I'm not interested. But if institutional money is in there and there it's flowing in there, now I am interested. My interest is peaked. This is something that can be sustained because the cash flow into it can be sustained. Just my opinion. So M&Qs, um, all time highs. That's all we could talk about. And I mentioned watch for retracement, watch the lower levels, and watch for reversals. Right, that's what we look for. Um, you don't you really wait to see price and volume are the two things that we really watch. And I might have to do something on that to show you. Um, when we drop to this level here, right, and we're at this line, um, if price and volume aren't increasing together, I'm not buying. When we drop to this line, if price and volume are not increasing, I'm not buying. So I want to see a reversal. And this is on the 30-minute time frame. Let me move this to the 4 hour. But I want to see a reversal and I want to see proof that it's going in the other direction, right? So if we jam this up on the 4 hour, it looks a little bit cleaner. And what you would see is if someone was playing this looking for a reversal play, you wouldn't be long here, right? You would watch this candle and then this next candle that breaks above. That's where you'd get long, right? On that break. And then your stop would be down here below this area here, the 14471 line. It'd be below that. Sounds weird, right? It sounds super weird that that's how you do it. But if you're playing on the higher time frame, that's how you play it. On the lower time frame, your levels will be a little bit different and those stops will be tighter. Like for me, I use a lot of 10-point entries on my things, and then I can trail. So I have a 10-point stop or a 15-point stop or a 20-point stop, depending upon the volatility of the day. And I wait for a retracement point, and then I jump in, and then I have my stop below that. And to me, if it breaks my, whether it's a supply or if it's a demand level, if it breaks through that significantly, right, and I see candle structure showing me that we're going to see a reversal, I'm in. But then if it continues against me, 10 points, 15 points, 20 points, I'm out. And so that's how I play it. And then once it goes in my direction, I begin to move to make sure that I get at least a two to one. Like that's that's just me. Like move your 1 to 1, then move your 2 to 1, then move your 3 to 1, then move to 4 to 1. Then you begin to scale out. And so I'm scaling and locking in profits on the movements. I'll do a video one day showing it, but it's just this, everyone has a different process and system that they use. Let's focus on the levels. Um, because I know the kids are going to be on me today. Today is their day. Have just fun day for them. And now that we have the new baby, fun day for the new baby too. So um so here, so from the 15-14s, what you wish to see, if you're bullish, you want to see buying above this. If you're bullish, you also would like to see a pullback, right? So anything down here around these 15-0-15s, you see this area, all these little lines here, candle structure here, anything back around there, it's still a buy. It could still be a demand level. So even if we see a gap down um, during the overnight session Sunday, if we see a gap down into this area, that doesn't mean sell. That doesn't mean weakness, right? That could just be more of some people exiting the position, rotating out, right? Like in the push. They could have been in from down here, 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 or here. And this nice push, they are on this pullback. They're getting out, and then more people, new money could be flowing in around this area. So that's what I'd watch for. If we continue to go up, what I want to look for is a retracement to some point for me to be able to play that long in a way that I'll feel comfortable, being that I'd have a clear stop. If I get long in this area, then my stop has to be below the low of this candle here, which is, what is this on the 4 hour? The low of that is 15082. So if I get long in anywhere in here, that will be where my stop will be at that point, or 10 points below that point will be my stop, right? And so I don't like that because I don't see significant candle structure there multiple times, multiple tests, multiple instances, multiple time frames where I'm seeing that at that level there is either a strong demand or a strong supply or a disagreement between the buyers and sellers, showing me that that's a point of contention. And so whenever I get in, I want there to be other people that see that as a point of contention, that see that as a level that they feel comfortable putting their money in the market too, right? Because if you're look at it like this, right? We're retail traders, and the institutional investors are the sharks. So we're the school of fish. It's in our best interest to swim together, right? And to be careful and to watch the shark. And so if you're watching the shark and you think you're swimming by yourself, that's not going to work out too well. But if it's a school of you, you have a better chance of survival. And so you want to, I know this sounds a weird example, but so for me, I want to see, where are the sharks, where are they going? If the sharks are going this way, maybe I want to be behind the shark. I don't want to be in front of the shark. I don't want to be. I don't want to be lunch. So look around and see and say, hey, when we're moving, who's in, who's not in, who's going to buy at what level, what time frame, what time frames do institutional investors look at? Are they on the more on a weekly basis, on a monthly basis, on a quarterly basis, and is it cyclical based on what industry or what sector they're investing in? So it's a lot of other things that you look at, because a lot of them do a lot of fundamental analysis that they're looking at more of a longer term play. And when they get in, they can't just get out like we get out, right? We could jump in and jump out of Microsoft 5 times a day. If you're in $3 million in Microsoft, or $4 million, or $5 million, you can't jump out in and out the same way someone who's only in 10, 15, $20,000. You can't jump in and out the way that person can. So your movements are different, right? It's the difference between turning around in a speedboat and trying to turn around a cruise liner. If you're turning around the Titanic, that's going to take some time. And you can't just, swing the wheel to the left and you go in the other direction. It's a wide swing, like you're driving a tractor trailer. It's a wide turn, wide swing. Got to be careful. Okay, enough of that. Let me get straight to the technicals. So watch for that, pull back to this area. And if we break above, watch this area here as a hold, right? And see if we get further extensions. I'm actually talking to Elisa so she can start doing the pivot stuff again, so she can show you, because my things are more retracement. And when it starts to get to levels of all-time highs and new levels, I personally lean heavily on her pivots and her pivot strategies to be able to find success. My retracement plays don't have success when we're going to levels we haven't gone before, right? So that's just it just to be transparent there. So let's keep it moving. And the other thing that's interesting is look at what tickers are pushing. That's creating these new highs. It's interesting. So looking at the RTY, the Russ, small cap financials, right? And not making all-time highs. It's interesting, right? We're down here around the 21.99 area. So this is why this is interesting. We had a lot of banks come out and like Goldman Sachs beat. There's nice beats, and they're going to probably do share buybacks. And once those share buybacks begin to come down, I'm pretty sure we're going to see a pop in the stock, right? So the pullback and retracement now, maybe just read and find out, sort of see what's going on with that particular ticker. If it's financials or whatever, just try to read read on all the news on it, and then you look for a level where you feel comfortable, just based on the earnings report. If you didn't read it, check out what their guidance is and what that earnings transcript says. It's a good time to look for it so you can find technical levels if you feel that ticker is going to go back up. If it's retracing, you feel it's going to go back up. You want to dig in and find a good level. If you're believing the thesis, right, that it's going to go up afterwards, once they start doing the share buybacks, and that you believe that there's a potential that they could beat and do even better for their next earnings, right? So what's that guidance look like? So that's all interesting. But the RTY right now is right above 21.99. Above that's 22.11, then 22.34, then 22.47. If I'm looking at this, I would like a break above the 22.11s to open up the 22.34s for us. If we don't see that, I would not want us to continue to drift lower around the 21.70s. I wouldn't want to see that, but it's possible. So I would wait for a break above the 22.11s and look for continuation, just for a potential push into the 22.34 area, 22.30 area. That's what I'll be looking for on the RTY. If it goes below the 21.90s and continues to drift, I would see if there's any reaction around the 21.72 area. And if not, watch the 21.53 area to see if there's any reaction, if buyers are stepping in. Don't try to chase something, but make sure you have your setup and you wait for price and volume to sort of give you that confirmation that, hey, at this level structurally, the buyers and sellers are telling me X. And so this is my thesis. And so this is the trade that I'm going to execute. This is my stop. This is my profit take. This is like, you make sure you have a plan completely of at what level do you get long or get short? At what level is your stop if it blows against you? At what level do you take profit? Or if you're not going to take profit straight out, at what level do you scale out? And if you're not going to scale out, at what level do you start to put a trailing stop? So have your plans all the way around so that you don't find yourself chasing or being a victim of trying to of hope, right? Hoping that it continues to go because it's made this great move and you have all this money. You only have money when you close the trade. Once you close the trade, what you have captured from the market is your money. What you see on the screen is not your money if it's still in the market and the market's still moving around and that price is fluctuating. Once you exit your position, that's your money. I apologize that I'm being a little bit verbose today, lots of talking. So let me try to speed it up. So watching this 4403 by 4405, what you'd want to see if you're bullish is just continuation, right? But if you want to see structural integrity, like for me, if I was like, hey, what's the best thing that could happen with this trade? I want to pull back here in the 43.84 by 43.83 area, right up in this area, 43.78. I want it to pull back into there, and then I want to see a buyback up from there, right, which will give me range into the 4403s again and 4405s, where at which point I could choose to scale out some of my position and then let some run. I have an option there. Up here, I'm just kind of, it's not, I won't say hope, but I'm like, hey, it'd be great if people continue to buy to allow me a separation from my entry point. Whereas here, because of the previous candle structure, these previous tops, and even this area, these tops here too, right? I can feel if we pull back there and break back through there, that there is significant structure below this. And this is a place where in the past, other buyers and sellers have been active. So this is not like breaking new ground, We've been here before, and last time we were here, this was the reaction of the market. So watch those levels. If we dip below that, we'll watch the 43.53, 43.33, and 43.15 areas. All interesting. But if you look at this dip, right? Look where we dropped into. Right here, right around these 42.30s, right? That's interesting. You look at the reversal. And then if you took, so this right here, you wouldn't just buy if it's here, but look at this push up. You saw this break back above, bullish engulfing. And then so if you took this because it broke back above and closed this way, your stop would technically be way down here. So everyone trades differently. See, look at the lower time frame. It's on the 4 hours. So if you took it off the 4 hour, let's see 30 minute. 30 minutes. That's much better. 42.40s, right? Look at that. That's where you would have tried your hand because you see the reversal. All this choppity chop chop, and that break above. That's where you try your hand right in there. Some people would try it here, right? And you get in here, and your stop would still be down here, and you probably wouldn't have been stopped out. So the low of this candle is 42.24, 42. Oh, double tap and right back up. So technically, you wouldn't have been stopped out if you entered with a low below the previous swing low, and you'd been riding this all the way up. So interesting, right? When you look at those reversals on the lower time frame. All righty, let's keep it moving. See what we've got going on. Amazon. So tech was, significant in the move up because there was just a lot of energy around tech. But Amazon's not at all time highs, right? Isn't that interesting? So Amazon's below 36.62. I would avoid this like the plague. It looks like earnings are coming up this upcoming week. The premium is going to be juiced. Watch your six. So we have these levels in Amazon. I would personally avoid Amazon unless you're trying to sell premium. I mean, there are ways to play it, right? You can play with verticals. It's all types of ways you can play. But with the premium being juiced because of earnings, I'll be careful with Amazon. But post earnings, Amazon is going to be amazing post earnings, right? So let's see. I'm not sure what day, if this is Thursday or Friday. Let's see. Today's the 25th, so it's probably Thursday. So Friday is going to be nuts with just people playing those contracts that that are going to be so volatile. Friday is probably going to be nuts on Amazon. But just looking at it here, we have the 36.62, 36.96, 37.33. See the reversals here of 37.70s. They're really, for me, I don't see much here. The buy, yes, drop back into previous highs, previous candle structure here would be nice, right? You see the lower wick, see here, boom, boom, and you see this push. This is nice, nice push. But this is just ludicrous. So you can watch these levels: 35.13s, 35 52s. But unless I'm going to be selling a little bit of premium, the chances of me excuse me, trading Amazon this week are low, to be honest. Maybe on Friday, but the whenever that premium starts to get a little bit funky, I don't like it because I feel as if there are things outside of the technicals and the fundamentals that's creating this movement in the underlying price and in the option premium, and I don't like that. Don't like that. Netflix had earnings. What do we talk about with Netflix? That Netflix is under significant pressure. Be careful. And earnings came. I had no idea what the earnings would say, but I know Disney's kicking their butt. There's a lot of other platforms that are, a lot of other properties that are launching streaming, right? It's a lot of pressure on Netflix to produce. And their model is really interesting. They invest a lot into these different series, and I mean, Amazon has stepped up their game. The movies that have dropped on Amazon, I think it's the Tomorrow War. I'm trying to remember the other one, that Rainbow Six one. Like Amazon has stepped up their game tremendously, also. So whereas Netflix used to be the place that you would go for series and movies, if you were trying to get outside those what's the legacy platforms, you go to Netflix. Some of these legacy platforms are doing a great job of providing and purchasing and producing content. So I don't know what Netflix is going to do because their play was get stars that are A or B listers and do a movie. Well, Amazon Prime, imitation's the greatest flattery, is copying that. And Amazon purchased was it Metro Goldwyn? So it's like there's so much they're gonna have the nostalgia play, and then Disney, what Disney is doing with the Marvel, and they have the New Age, and so there's a lot of when it comes to, I'll say, Amazon Prime, and when it comes to Disney Plus, they have a lot of nostalgia plays that I think can be really powerful. And Netflix has some things, but I'm not sure if Netflix has as much equity in the nostalgia category, where they have these things that they could bring out that will make you think back to a previous time where you're like, hey, I'm going to watch this movie or watch this show or watch this thing because I connect with this, whether it's childhood, whether it's my first date, whatever it is. So not to go on a soliloquy, but just I think it's really interesting, and let's see what happens with Netflix. So technically, watching this level here, this is the 514s. So remember, we were in this area for a while. We couldn't get above it. We drifted below, pull back to it, drifted below, pull back to it, broke above, took off. Now we're back into that area. What we want to see here, if you're bullish, is a separation to the upside. And you want to check out the earnings report to see what the guidance is saying. What's their expectations? Are they planning to potentially raise prices on their current subscribers? Do they have a way of recreating? Because there's only one of two things that they can do, right? In my opinion, either you charge more for your services, that's one, or two, you create new engaging content. So it's one of those two things that you have to do to be able to bring more eyeballs or bring more customers to your platform. And I believe the pandemic showed the peak of of customer growth, because everyone's home. That's the greatest number of eyeballs you will have, unless you break into a new territory internationally, right? So are they going to acquire a company, maybe in China or someplace else, or in Korea or someplace else, wherever they're not as strong? Are they going to acquire a company that gives them access to new eyeballs? Because they've been pushing. So are they going to acquire something that gives them more access to more eyeballs? I don't know. But that's all I could think of right now for Netflix. I'm not digging deep into it, just like a surface level thought process on that. So I'd watch this level and see if we break above it. If we dip below the 502 area or below the 500s, 493s are up next, and I'll probably be fading this bad boy. Or I could be selling some premium above the next level up here somewhere if I see it break below here. So we'll see. So if it breaks below 50, 503, 502, and it's below the 500s, I might be selling premium above the 514s, 515s, selling premium above this, with the expectation that it would expire worthless. But we'll see. You know what I mean? I think we'll see. We'll see. Um, but either sell premium or buy puts. But if it drops below here, and my target would be the next level, what this 493, and if we see weakness through there, then you have the 490, then the 485. But I'll be careful here. Look at all this candle structure that you see all the way across, from the 10th of May all the way up through the 19th of May, then tested again on the 9th of June. Look at all that. So I'd definitely be very careful in that area on Netflix. NVIDIA. Um, so looking at the levels now, retracement to previous levels because of the adjustment to the ticker. So we're above the 181.91, like that. We're below the 292. So what we'd like to see is a rise above this and a potential push up into the 217s. So we'll see what happens here with NVIDIA. There's a lot of expectations from used car companies that the squeeze in the market as far as chips and chips production is going to extend into 2022 and potentially 2023. I'm not sure the details on that. I haven't really been digging into it that much, but Nvidia is interesting because they're one of those front and center companies that is or should be doing a lot around that. So Um, for me, I'm just gonna wait and see what we can do here on the um on the technicals. So I will wait for either a break above the 200 hole and see if we get an extension up, and or a dip down around the 181 area to see if there's either action from the buyers to bounce it again, or action from the sellers to try to dip this a little bit lower. I'm going to tighten up some of these lines in here to give us a little bit more some of these in betweens, because there's some in between areas in here that I think may be valuable for entries and exits as far as intraday trading. So I'm going to tighten up this chart a little bit this week, and I'm going to see if I can trade a few of these, trade a few of these contracts. Yeah, I think I'll do some options on this. I'll trade some contracts on this week, um, just to see how it moves. So I'll check this net NVDA out this week. I think it's interesting. Next up, Microsoft. Look at that, going bananas, right? And this is one of the things that was driving the market. Look at this push on Microsoft. So what we want to see is continuation to the upside. If we pull back, the place we want to watch is previous highs. This 284, 28 by 283.62 area. This area, all this area here is what you want to watch. 284.27 by what's this? 283.60-ish or 59-ish. A pull back to there would be great. If we don't get that and we continue up, just be careful, knowing that there is a slight overextension here. So I would love a pullback either to this 286.40 or preferably to this 284 area, 283 area, and then look for the buyers to step in and push this back up. That to me would be a great, a great trade. But we'll see how it works out, right? If we look back here, maybe there was an expectation that that would happen back on the 27th of April, right around that time, right? So when we broke through that on the 21st of June, right around this date, the 20th, 22nd, 21st, 22nd of June, if I had been waiting for this to retrace back to this level, right, back to this what's this 261 level to give me an entry, waiting a mighty long time, never came. And this could be more of the same. This could be telling us, hey, I'm going to 300 and nothing is going to stop me. If that's the case, waiting for a retracement here to the 280s, 284s, may not happen. So watch this on the intraday and see if you can find a good low risk trade for yourself to be able to ride some of this upside. I primarily am going to wait, but if I see strength, meaning increase in price and volume, I may take a quick intraday scalp on this to the upside with tight stops. We'll see. You don't dictate to the market dictates to you what you do. Apple, same. Earnings coming up. Being that things have opened up, I think they'll probably beat. And they've been pushing for increased production for some of their suppliers. So I think this may be a beat, but I'll wait to see how this shakes out on Apple. But Apple is really interesting. Retesting this trend right here, back on the 19th of July. Look at that, dip into this trend line, headed back up. So we just have to break this top, this 149.97 area, and get some continuation, and this will be a perfect play because this is a great intersection between this line, this 142.14 area, which is a previous supply demand line that we had here. This is a great, I'll say, interaction between this and also the trend line that price and volume come to intersect with the supply demand and the this trend line, and gave us this bounce and the pullback here, bounce, beautiful. So I'll be watching this to see if we get continuation to the upside. If we dip, I'll probably be a little bit leery. I'm going to extend this trend line up a little bit to see if we touch that again and continue to go up. But if you watch this rise, each time we've touched a trend line, even though we came back to test it here, look at this push. We're higher each time. We're higher each time. And then we separate from it. Then we come back to it. Then we're back again. We haven't made a higher high. So this is actually a different structure than some of these down here. So we have to see if this is either exhausted or if there's more room to the upside. I think because earnings is upcoming, I believe that there is more room to the upside, and the reason why I say that is just because there's been a reopening in many states. People are probably going back into the Genius Bar. They're probably selling more accessories, selling more services. So my expectation would be that they would see an increase in volume and sales, right? So I would expect it to go up. The other reason I expect it to go up is that even though the Delta variant is pushing, it's only pushing in specific states, and there hasn't been, and people doubt that there will be a return to the shutdown and lockdown where stores are closed. I mean, there's been amendments to, hey, now wear a mask when you go inside somewhere, but the chances of, just from a political standpoint, the chances of stores being shut down again, I think are pretty low, unless there's just a dramatic outbreak that totally changes the narrative on what's going on with the vaccines and what's going on with COVID right now. Just my opinion. INTC. So while most tech is either making all time highs or flat, sort of slowly bubbling up, Intel's going down. So digging into that, look, they just had earnings. So if you look at Intel on earnings, they usually don't have a good reaction after earnings. So this may be headed lower. We'll see. So I'll be watching this closely to see if there's more weakness. Um, I may also leave it alone, but I'll be watching Intel to see what it does this week. I may take one or two trades on this. I don't know if I'll even have the time because we have to use your bandwidth for the things that you feel super comfortable with. And Intel being down here, I don't know why they are. Like there has to be a reason why they're down. But they're below the 53.58. Next level is 51.11, 49.16, then 47.27. If you can regain the 55.40s, then we have the 56.91, 58.85, and 60.94 on Intel. Oh, yeah. Everyone's favorite burrito. Well, if you're north of the border. But CMG, look at these movements, right? What were we saying about CMG that's interesting? We did expect it to go up. Why? A couple of reasons. I thought they did a great job during the pandemic. I really really enjoyed their food, their service. It was always fresh, had no problems. They did a great job managing the store, allowing some people to, because they have outside tables and inside tables, right? And so they were doing a good job of socially distancing. And I thought that there was not a significant drop in volume in the non-college Chipotle's that I visited, right? Or that I went to. So it was just there was just people were there. It was nuts. Now, um, as far as universities opening back up, many universities have opened back up and students going to be back on campus. So what I would expect is that they may guide up. They may expect their expectation may be that they're going to get even greater sales. People haven't had it for a while. They may be really craving some Chipotle. So you're back in college, and you're is back to it. So I think because they're that that customer base is really nice and really good for them. I think that they're that maybe they'll keep going, right? So we'll see. They just had their earnings, and we see what happened. And I'm sure that guidance was beautiful. I'm going to go check it out. But you really CMG is a great company, and they have great leadership, and their product's amazing. Especially at a time like this, their product is amazing. Um, but I'm not chasing any of this. Just to be honest, I'm not chasing any of this. And so for me, I'll wait for a dip and I'll either fade it or I'll buy the dip. But I'm not chasing any of this. It can go to 5,000 if it wants to. I'm not chasing any of this until I see a retracement. And then from that retracement, I would feel comfortable stepping in. So we'll see. And also I have to go and check out the earnings transcript to see what it's saying. But congratulations to CMG. I didn't tell you these levels. My apologies. So the levels I have 1799, 1778, 1754, 1716. 1655, 1622. Um, Me personally, even if we had to get a retracement to 1799, if the buyer stepped in, I may or may not be interested. I need a deeper pullback here. Maybe even to the 1716s would be a little bit more comforting. Um, but we'll see. We'll see what CMG does. Great movement. And yeah, for those that if you're invested into it already and you roll this up, congratulations. For those who are looking for a sort of like you're double dutching, you're looking for space to be able to jump in, be patient. It will give it to you. You will get your opportunity. Looking at McDonald's here. So um we're going sideways for a while, right? And so remember what we were watching for was, are we going to break above the 237.90s? And if we do, we should see continuation, right? If we see price and volume, we keep going up. And so the 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 movement here I think is beautiful, especially since it is pre-earnings. So we have to see what it does on earnings. And if we see a pullback on earnings because of this run, and if the perspective is that it's all priced in, I believe McDonald's has done a great job during the pandemic, and they continue to do a great job with providing easy access um, to their food and to their merchandise. It's very easy to get McDonald's, whether you get it through a delivery service or if you pick it up yourselves. They've done a great job making it easy to get that. And another thing I forgot to mention about CMG, do you guys remember a few earning seasons ago, they missed earnings because they had not opened as many new locations as they had projected, right, for that quarter. And so people were like, "Oh, you guys missed." And so what the CEO said was, "No, this is probably a year or two ago. There's such great leadership." What he said was, what we have decided is that we're not opening any new restaurants without a drive-through. And people were like, "What?" He's like, "We're not opening any new restaurants without a drive-through." So even though that has caused us to miss our number of restaurants that we projected to have open for this earnings season, we believe that long term having a drive through will benefit us so much that it's worth it. And so I'm like looking at it now that the pandemic hit, what do they have? A drive through. Brilliant, brilliant, brilliant leadership. So neither here nor there. Just I remember that just popped into my mind. I remember that reading that earnings transcript, and so he was getting hammered for that, but he had vision. Like the company had vision, and maybe they didn't see the pandemic coming, but they really thought that opening a new restaurant without a drive-through was detrimental to growth. So hey, company doing it the right way. Not saying they won't mess up somewhere or get smashed, but they made a lot of good decisions since they were in the 300s. A lot of good decisions. Head over to JPM. Um, oops, PM. We're not. No, what's funny is if I showed you trading view, you see a ton of lines on PM. That's what's funny. But cycles, right? Things go through cycles. So JPM, we're not seeing upward movement here. We're kind of going sideways to down. So I'll be careful. The lower line is 149.36. Below that, we have the 147.11s. I'll go ahead and extend this. But for me, I'm not touching. It seems to be, if you look back to February, look when it was in this area. You saw a little flare up, but it was right back in this area where it just sort of moved and dipped below, right back into it, pulled above. And this is sort of like a breakout, but it's pulled right back into this area. Look at this. This miniature channel below, then right back into it. So I'm going to leave JPM alone, and keep your ears open for share buybacks. And when that comes, look to see if there is movement to the upside, because usually there is. Whenever they start to to do that, the price, the stock does tend to drift up. And this doesn't mean banks are done, leave banks alone, or anything of that nature. It's just be careful, be cautious, and watch, because there's a rotation into tech, right? And financials seem to be struggling. There will be a rotation out of tech, and tech will go down, and then financials will go up. So just watch for the rotations and try to follow that when you see it happening, and just capitalize by sort of following where the big money is going. Goldman Sachs. Look at Goldman, nice bounce from the pullback. So had earnings, and we were trying to figure out, I believe last video, how much would be priced in, and then we see this pullback, right? And we see this bounce here, a little bit above this area here where the last dip was, and this dip here. So, yeah, mm, I guess you could almost say, mm, mm, this could almost technically be an inverse head and shoulders, and that we're going to go that way potentially. Maybe I'm looking at this wrong. Very early, no coffee. I don't really drink coffee, but no tea. Um, but this is interesting. I'll be watching Goldman Sachs closely, because when they start doing their share buybacks, this thing is probably going to rocket. And all the data that they provided, they're absolutely crushing it, 100% crushing it. So for me to think, the only thing that I think has been interesting is that I've heard a few conversations where they were saying that a lot of the speculative investors, or people that work for Goldman Sachs and these other financial institutions that worked from home, actually produced greater working from home than they did working inside inside the company, or the biz, or working. How do you put that? It's not the reverse telecommute, or working from the company, right? So working from home, they produce greater than working from the company. That's interesting. But a lot of these companies want people back in the building. So we'll see how that affects or impacts them going forward. Because to me, I'm like, hey, if your greatest producers are producing greater working from home, leave them at home. But a lot of these companies have a culture where the people that are more seasoned and that are the greatest producers of today, they're in the building teaching the greatest producers of tomorrow, right? Their future producers how to produce and how to grow. And so I think that's super, super interesting to see how that plays out with Goldman Sachs. Because a lot of those people probably really enjoy working from home. And if your production numbers said that you produced even greater, mm, it's a conundrum for the company. Sort of present growth versus training and future growth. It's a really interesting thing. I mean, you're not going to have someone go into your home, like a trainee come into your home and teach them from your home, right? It's interesting. So I think that that's sort of, sometimes a company has a DNA, and has some things that make that company successful, and those things can be difficult to adjust and to change, even if you're seeing great returns from a brief switch, which was people working from home because of the pandemic. The the um the long-term company culture really speaks to people being in the building and training the younger, less experienced investors and traders, so that they also can become, like, they're your future big earners, right? So you definitely want them to be trained. So I think it's very interesting. So let's move on to the next one. Tesla. So Tesla, we thought it was gonna, go nonstop up, just run. And what we see is we're hovering below the 651s. Is this negative? Is this positive? To me, this is still positive. We'll see what earnings brings, but I expect there to be a direction, and from that direction, we'll follow it. And so for me, I would love this to be back above 784. I'm sure it will be at some point. they really need to do something with this stock because I think it's a little bit. No, it's not a little bit too pricey. It's actually priced well, but I think it'd be great if this was in like the 300s or the 200s. You'd get a little bit more activity on it, but it's still doing well. So let's see what we get from earnings and post earnings. Watch these lines, right? We should see an extension. We have 616s, then we have all these Sophie levels down here, these pink lines, these pinkish purplish lines. Okay, my daughter would say fuchsia. And then to the upside, we have 713, 784, 819s. So we'll see sort of what they did as far as production numbers and what they're forecasting for the next quarter. I think it's interesting. But you know how Tesla tends to get a bump from SpaceX, right? Well, right now, as far as from a social media buzz standpoint, it's it's Virgin, Vir, Vir, it's Virgin's space travel. It's Amazon. It's Bezos's space travel. That's sort of what's taking up the media, and you don't really hear anything about SpaceX, right? So that's really interesting because SpaceX usually whenever he launches a rocket or something happens with the space station, that you see a slight tick up in Tesla stock. I wonder will that be the opposite now that you have these other companies that are encroaching on that space, sort of like Elon owned space, right? Because SpaceX was the only privately popular owned space company, but now Bezos is trying to take a piece of that, and Branson's trying to take a piece of that, right? So how does that impact SpaceX, and how does that impact the um, the good juju or the good vibes that people feel for Tesla when SpaceX launches a rocket or lands something on the space station or talking about exploring Mars? Like how's that impacted now that you have other major companies that are part of that narrative? So interesting. And also Tesla, I mean, a lot of companies are under pressure right now in China, right? A lot of crackdown. So people may wonder if is it possible that Tesla could end up being one of those companies? What are the risks or headline risks for Tesla in dealing with China and sort of the crackdown on certain corporations? Like, is that and does will Tesla be impacted? Will the battery factory be impacted that they're building there? Like all these different things, I think are really interesting things to consider. Um, you know, when the earnings come out and when we see what the guidance looks like. So I think it's really interesting on Tesla. Spy, same thing, pushing, um, just insane highs. So we'll see how this all plays out. It'd be great to get a pullback in here, but this isn't too far. We'll see if we get a pullback here or something like that. But this looks great. We'll see. I think it's just really steep, and I think there's just a lot of juice in the market. But I think we have to be careful of inflation. Um, the way that money is just flying around right now, and money is sort of just being printed. Um, we still have a pandemic, even though the restrictions have been eased. Delta variant, a few of the things that are pushing. I think there's just a large challenge because there are people that have not paid their rent or paid their mortgage in well over a year, and that situation has not been resolved. The used car industry, right? Used car prices are up. People are paying more for used cars because there's a lack of computer chips for the new cars, and so the market is sort of struggling that push and pull between supply and demand, right? That's one thing. So I think there's a lot going on, like infrastructure, the infrastructure bill being passed, and just hundreds of thousands of people getting employment and businesses benefiting from that. So I think there's a lot going on right now. A lot of just, I think, big rock things, like huge, right? Just big things going on right now that can dramatically impact the economy. Just dramatically, right? And we haven't truly seen the impact of COVID yet. Why? Because there was legislation passed and funding and things done to mitigate the economic impact of the pandemic. So we have to see how all that is. How do you unwind all that, right? It's a big ball of stuff that has to slowly be sort of unwound for us to really see how our economy functions. Right now, our economy is like it's juiced up. It's on HGH, it's on coffee, it's just running nuts right now, and it hasn't taken a nap in a long time. And when it takes that nap, might be a deep sleep. And when I say that, I mean this might be a strong pullback. We'll see. And maybe it just continues to stay boost up and stay hyped up and it's running on adrenaline. But the market has been running and there hasn't been the what people usually expect, right? Cyclical pullbacks. We haven't seen what we usually see from the market. Even the housing industry has just been on fire. So I think that there's so many areas, so many sectors where things have been on fire and things have just been booming that um I'm not saying to not be following these laws because you should. What I am saying is just be careful going all in when there's still so much uncertainty out there. That's just my opinion. If you liked this video, please go ahead and tap that like button. And if you'd like to receive more content like this, please subscribe to our YouTube channel, Power of Pivots, where you can look forward to not just receiving content from me, but content from Elisa as she shows you how she utilizes her Power of Pivots script and strategy to find great pre market, intraday, and post market entries, and also wonderful swing plays. Thank you so much for your time. Have a wonderful week of trading. Stay safe, and we'll see you next week.